All right, welcome back for another episode of Carnivore Trade. Today is Wednesday, September 7, 2022. Not done so already, give the video a thumbs up, like, comment, subscribe to the channel. Come find me on carnivoretrades.com for swing trading alerts and analysis. Guys, just closed out our 20th winner in a row for the second time this year. The streak is 21. That's the record. Hoping to break that soon. But guys, you got to go all the way back to June to get a loser on this record here this year. Having an amazing year so far. Take advantage of the free trial. Get in on that because we are absolutely killing it and navigating this very tough market this year. And it's a swing traders market. It's been a great traders market here this year. It's not great for buy and hold. But if you like the volatility, then there's lots of opportunities here. By the way, that's our fifth winner this month in just 4 trading days. Anyways, enough of the plug here. Let's get into it. So spiders finally getting that bounce up 1.8% here. About 3-4 minutes away from the closing bell, and we're sitting just under that 397 handle here on the spider. Excuse me, 398 handle on the spiders. Triple Qs just shy of 300. They backed off of that just now at 299 and up to 0.08% currently. Dow up 1.3. So a nice rally here. We're finally getting that bounce we talked about. Let's look over here at the spiders daily. And if you remember yesterday, I basically said, I'm expecting some type of a bear flag, consolidation, bear base, whatever you want to call it. And I said we probably get some type of a bull fake, a nice bid up, maybe we challenge that 400, 401 area. And I think this could be the start of that. So this is very reminiscent of kind of like this consolidation and this consolidation where we had that, we'll zoom in here. We had that kind of like fake breakdown and then a fake out to the upside. Again, fake breakdown, little doji candle, nice move, and then a fake out to the upside and then down. So very reminiscent of that. We have Powell tomorrow and we have CPI Friday. So we have catalysts for moves in either direction here. I got to think CPI is probably going to be cooler. I'm not sure what the estimates are, but the recent sell-off in commodities, you got to think that's come in a little bit here. Again, I don't have any idea really what it's going to be, but that's my kind of, prognosis, I suppose. I just care about the market's reaction, but if you ask me, commodities have come in pretty sharply, so that would make sense. I'm not sure what the consensus is. I'm sure it's probably lower than last month, but overall, we do have some catalysts. There's a lot to talk about today. So, again, Powell tomorrow. It does look like there's some short covering going on. That's really just what this looks like in general. So we gapped up, actually we gapped down a little bit on the spiders, little pullback flag and little change in character here. So yesterday we talked about how the fact that every flag just seems to fail. It was like very reminiscent of April and May. And this one, it actually played out. And then we got a higher high. So there's your little higher high. We finally got above that 394 area. And then, just the shorts just kind of kept covering. The algos just bid everything up as soon as we broke that level. If you look at the volume, we got about 1 minute left to the close, and we're at 60 million. So we're 9 million shy of average volume here on a 50-day rolling basis. It's not a lot of institutional participation, if you ask me. So it does just look like a little bit of short covering ahead of Powell. And we did see that this in this instance here, this was the FOMC there. I don't believe this was anything, might have been a Fed minutes, I think. But this was definitely an FOMC, and that ended up being a good fake out. So I do think where upside is kind of capped here. It's a little bit limited, but I still think, we could see some short covering. Maybe we could even see a little bit more of a rally tomorrow. I definitely would not rule that out. Got to be careful in this environment. It's a very volatile year in stocks, and we just got to trade the levels here. But so far, bulls finally getting some relief here. And again, we talked about this yesterday. Market's about to close here, by the way. There is the closing bell. So there's the bell. So closing at 397.76. So a pretty good dump there in the last minute. But in any case, we talked about this yesterday. Weekly support. Okay, so we're not just going to take that out without like a black swan or something. I know that yesterday, the market's kind of whimpered and it was really weak, and Friday we were really weak as well. But, you have to think there's going to be some type of reaction here. You got 4 or 5 weeks of consolidation there on the spiders, same thing, of course, on the triple Qs and, pretty much everything under the sun that was, equity related between June and mid-July, had support right in this area. So you got to expect a bounce. We're starting to get one here. I don't know how long it lasts. I don't know how much upside is in the cards. If we close above, so we're looking at the Qs now. If we close above 303.75 tomorrow, and we close above, I think it's 401.50, 401.56 on the spiders, that could open the door for, a move back up to that 20 moving average. I would not rule that out. It's certainly a possibility. Right now, I'm not leaning in that camp. I think it's going to be more of a bear base kind of chop. But, you definitely got to be on your toes and definitely got to be ready for anything in this market. So got to analyze all possibilities here. Anyway, so we looked at the Qs. Russell 2000, nice powerhouse move, up 2.16%, closing at 182.17. So not back above that 50 moving average yet, or 100, but again, there will be a little bit of resistance in here. We gapped into it on Friday, and that sold off. So that tells you that there's still sellers there. So that is definitely noteworthy. Now, it's not super major because we've traded through it a bunch of times here, but we'll definitely watch how that reacts. And again, 183.95, a close above that would open the door for a move back up to probably about 189 or so. So we got to keep those levels on our radar here. But overall, nice little move there on the IWM, up move, little consolidation, and a blast off there all day. So stocks finally getting a little bit of relief. Well, we'll just kind of see how they react to Powell and to CPI tomorrow. So tech was noticeably weaker today. So semiconductors here, this is definitely a much weaker bounce. You can just take a look here visually, up 1.6%. You look at the Qs though, or even just look at the spiders. Look at that big, power candle here off the lows, and the semis kind of whimpering. Barely got out of yesterday's, didn't even close above yesterday's high. So semis showing a little bit of weakness. Take a look at Apple. We didn't even get a pump off the Apple event. So, up 93 basis points, a modest move, but still inside of yesterday's candle. I mean, that's with the rest of the market surging. Apple, with their Apple event, that should be, usually they get some type of a pump into these types of moves. And not so much. A lot of it was Microsoft today, which really beaten down chart, by the way, basically into that gap fill here. And pretty impressive sell-off there on Microsoft, but mostly Microsoft doing the work, as well as good old Tesla here up 3.38%. Beautiful pattern here intraday. Little gap down, 1-2 surge, sideways. Nice bull flag inside bar and a bid there. So that may have a little bit upside tomorrow, as well as, being really the leader in tech. But outside of that, semis on the soft side, IGV on the soft side. Take a look at the IGV this morning, up and then, kind of came back in. And the semis actually went negative for a little bit. And we look at the spiders here, they were never negative outside of the first opening tick. So a little bit of weakness in tech here. Not really a good sign, especially with bonds, kind of getting a bid here. So the 10-year actually, the yield was down 2.25%. 30-year didn't quite get that gap up that I was looking for tomorrow to short, or today to short rather, I said yesterday. But it did have a nice reversal nonetheless, down just under 2%. HYG came off the lows finally in an oversold condition. That was due for a bounce up about 1.5% on the day. But tech just noticeably weaker across the board. XBI did get a nice bid. This one's been a little bit, this one hasn't really been following the rest of the market so much. This has kind of been beating to the marching to the beat of its own drum rather. But it had a nice little double bottom there. We talked about that when it happened. Beautiful double bottom into the March lows. And that one's kind of been like marching to the beat of its own drum, but that had a nice day up 4.24% there. But again, semis, cloud, Apple, not really showing what you want to see. Let's take a look at Google here. Yeah, Google had a nice outside day, although this is a soft chart as well. Let's take a look at Amazon. Yeah, Amazon up decently, but these tech names, you want to see those semiconductors lead if we're going to have any sort of significant low in here. And that's why I'm not super convinced that we're really ready to get above that 401.50 area or the that 302 or 303.75 area on the Qs. So tech noticeably weaker, not what you want to see if you're a bull right now. All right, transports here. Again, not good. So yeah, they finished up just only up 0.5%. They came nicely off the highs. But so take a look at the intraday here. Gap down and flushed for the first hour. And this is with, I'm just going to use USO. USO gapping down and, just getting punished. If we look at crude, the actual crude, this started to sell right at 9 o'clock, like really sell. And it just dumped out all day long. We'll talk about crude. We got a lot to talk about with crude here. But with the transports, that should be bullish. And it wasn't until really the afternoon when everything started to get a lift and the algos just kind of bid everything up. Granted, it held this little pivot. It had a nice reversal candle. If you took this in a vacuum and showed this chart to me, I'd say that's a good bullish reversal. But considering the beatdown in crude today, it's kind of weak. You expect the transports to be the biggest beneficiary, or one of the biggest beneficiaries of a new low in crude prices, or at least new local lows in crude prices, and the transports are on the weaker side. So definitely a little bit of a red flag there, as is the weakness in tech. So again, not really liking the fundamental bull case, and that's why I've been saying really since I started this video, that this is really just kind of a short covering rally ahead of Powell. So a couple of little problems there, and we'll definitely keep that on the radar here. So we kind of talked about interest rates already. HYG we covered. Home builders here, again, outside day, oversold condition, getting a bid off the lows, up 2.82% was the XHB. ITB up 2.5%. Again, nothing too noteworthy there. It got a bounce just with everything else. VNQ, which we made note of yesterday as being on the stronger side, it was green in the down market. That continued the strength. So up 2%, got above that red bar high from Friday. That's a little bit, but it's impressive there for VNQ. That's definitely a leading ETF or a leading sector, I guess, over the last couple of days. So VNQ may have some more upside to 96. That was your breakdown area. You also have convergence of all those three moving averages moving right into that area. So that should be some short-term resistance there for VNQ. But, hey, give it the benefit of the doubt for now. It's shown a little bit of relative strength here over the last couple of days. XLF, again, a strong sector, up 2% here. Financials continue to be strong. What can you say? Still hasn't gotten above Friday's high, but a nice outside candle there, and it's holding up well. XBD here, we talked about that 50 moving average, and it's getting a bit off that. If can't take out this high, though, you could start to put in a bear base as well. Same thing with the XLF. You want to see it be able to take out that high. If it can't happen, then this could end up becoming a bear base. So we'll just be on guard for that moving forward. I think everything's going lower regardless, but for what it's worth, this is a strong sector right now. All right, energy. Full disclosure, I have nibbled on crude. So just everybody knows, I know I've been talking about it for a long time. And all the way up here, I said, don't buy crude, 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 wait. Now we're starting to get into the accumulation zone here. We're sub 82. I think that's a good number there. I did start a position a little bit higher than that, just so you guys know. And I will probably definitely average into it if we go lower here. I don't see it getting through this lower trend line right here, blue trend line there. You do have the 100 moving average there, but really this is kind of off the monthly. So we're kind of looking at that 20-month moving average, oversold, drop and pop setup. Doesn't mean it can't pierce it through a little bit. It's totally common, especially when you have some velocity behind it. And again, it's nothing to say it can't go down to this trend line, but I don't think it gets through that ultimately in the long run. But yeah, nice little dump for crude. Been waiting for this for a long time, and we're finally into that. So we talked about that weekly inside bar, and I said, got a nice bid the other day, last week or a week or two ago, but I was like, that weekly inside bar is more dominant. And sure enough, the 50 moving average ended up being that catalyst, and we pushed down. So crude, I think, is finally into some accumulation zone here. And speaking of crude, we'll just talk about XLE really quick because it's going to take us off on a tangent. But XLE did get hit, down 1.16%, lost that lower trend line there. It's still a strong sector, though. I mean, look at the XLE over the last year, and then look at the spiders. It's still a strong sector, so holding up well. XOP, same thing. Bounced at that 100 moving average, and it managed to hang on that for the in the near term, at least by the close today. OIH as well, trying to hold that 50 moving average. You did make a little daily chart lower low, though, so maybe comes under a little bit of pressure here in the near term. But again, energy is still a strong sector. At gas did not bounce. I did not get into this. I'll explain this in a second. So if we had come down to here, let's say yesterday, and then today we had gotten into this level, I probably would have been all over it. But that candle signals velocity, and velocity definitely matters. So I think this can get through that level. If you guys nibbled on it, I don't have a problem with it. You keep a tight stop here. Just keep a stop right around 750. I think you'll be fine. or just be prepared to add to it. But this can drop to $7, maybe even 6.50 like that. So be careful with Natty here. It's a tough trade, but you know it can work out. I would have liked it a lot better if it took 2 days to get down to that trend line, but because it was one day, that tells me there's velocity behind it, and it sold off on good news. There was that news from that there was Freeport or one of the other ones. But anytime you don't rally on good news and you sell on good news, that's usually a red flag. But anyways, to get back to crude here, let's talk about the dollar. So I think the dollar versus yen is topped. And I talked about this probably a month or two ago in the Wall Street for Main Street videos on the weekends that I do for Jason. And I said, you know, this can get up to probably about 150. I was just generalizing the target here. I just back checked the numbers and it's basically topped. So we got this trend line right here. It's a nice little trend line, but doesn't really mean anything in the grand scheme of things. I'm going off of the yearly, which I don't do very often, but I said in this video, you know, this has got measured moves going up to about 140. It's actually 145. That's where the measured move goes to. There's two of them. One of them is an inside bar, and one of them is just a standard little measured move. Either way, oh, and then you have that 50-year moving average coming up right here, and this is just starting to print there. So interesting stuff there. That's at 148. Again, doesn't mean it can't go a little bit higher. You know, I'm not going to say it can't go up tomorrow. But this trend line is kind of a compelling case there for at least a fade here. I think it's topped, or at least near upside is very limited. It's close to topping, something of that nature. So I'm going on record saying that the US dollar to yen is basically cooked at this point. Again, maybe it could have a little bit of a surge in it. With the dollar index itself, and again, I promise this relates back to crude, but the dollar index itself did have a nice reversal today, and that's why the market rallied, mainly why it rallied. I think a lot of it was short covering into Powell, but good reversal, came off the lows. I wish we had volume so I could analyze it a little bit better, but you do have, this is about as close to an engulfing reversal as you can get. I would love it for it to be an engulfing reversal, then I'd feel a lot more comfortable about calling an actual top. Regardless, whether it's topped or not, if it has topped, the market loves this, right? Because it's like finally relief. Finally, that damn dollar can finally, you know, top out, and we can get some relief here. The problem is, very shortly, the market's going to realize that means that crude's going to bottom, and all these other commodities. And I mentioned this a week or two ago. What do you think is going to happen when the dollar tops? Commodities are going to bottom here. So that's going to be the double-edged sword. So short term, you know, I said, look, the market will like that, but pretty soon it's going to realize that commodities are going to come to a low here. Copper maybe putting in a higher low here. We talked about this yesterday. Nice bid, nice volume there. That 340 handle, it could be putting in a higher low. I've gone on record saying I like silver at this level. I'm long silver right now. Platinum, very good W pattern here, potentially in the making. If this can get up to this area here at 875 and give us a V pullback, this can really take off. You know, corn, soybeans, all these things that have crashed, wheat, you know, all these things that have come in very sharply off the highs, crude, you know, all those things. Those are going to catch tailwinds from the dollar index if and when it tops, which I think it's probably pretty close. So I've, you know, basically said that we're just looking for a reversal at this point. We know it's parabolic, we know it's on borrowed time, but you know, it's just a matter of getting that confirmed kind of sell signal here. But in any case, just want to like give you that little speech as far as how I feel about the dollar versus the markets and commodities. Anyways, without getting too long-winded here. So we talked dollar, we kind of touched on metals. Gold here, nice reversal day, up 1%. Take a look at the GLD gapping down, nice little surge. GDX, very impressive. Outside candle, took out the last 2 days, and a little bit of a higher low there. Higher low versus the dollar making higher highs. And I don't usually do this too often, but got some pretty good positive divergence there on GDX. And not quite there on the weekly yet, but you do have some positive daily divergence there on that MACD. So there is some money flow, I believe, coming into these sectors. We talked about silver earlier, nice little pop there on silver. SILJ as well with a slight higher low. So low, higher low versus spot silver. I like when the miners lead, especially the junior miners. So that's a good sign for the sector as well. So metals may be coming into some type of a bottom here. We'll keep a watch on that moving forward. But that dollar index, it's all about the dollar. Can that dollar finally give us a reversal? If it does, we could see a shift in character in the market. All right, anyways, we talked about metals, copper, platinum. You guys know I like that. Bitcoin. So not really too much to say. Had a little bit of a bounce day, I guess. 1.4% is nothing for Bitcoin. I mean, the spiders were up more than that today. Yeah, geez, the spiders are up 1.8% today, and Bitcoin was only up 1.4. Ether only up 1.3. Much better technical position there. Doge getting a bid here. Everything Litecoin. But you want to see Bitcoin and Ether lead. Ether is leading right now. I'd rather see Bitcoin leading, but this is weak. I mean, can you give me an engulfing reversal? I mean, can you do something that's showing any sort of strength here? I mean, it's just very soft right now, and it just continues to be that. Look at this stair step down. Bear flag, bear flag. Was it going to do another one? I mean, it very well could. So coins again continue to be on the weaker side, and nothing has really changed as far as that's concerned. All right, so back into the spiders here. So we had that close 397.78. Good surge. I think it's a short covering rally. Volume here, even in the after hours, is still just touching average. So doesn't indicate that there's much institutional participation. Excuse me. But we'll see what we get tomorrow. We have Powell. We have CPI Friday. It's going to be a fun week here and very volatile, very good to trade. Anyways, guys, going to wrap it up here. Come find me on carnivoretrades.com, and I'll talk to you all tomorrow.